oil and gas space, Trump met with more than a dozen of oil and gas executives at the White House as the industry lobbies the administration to slash regulations. The discussion focused on permitting and regulation and charted plans to boost domestic energy production amid falling crude. And the meet also focused on reforming the need to build a national electricity grid to compete with China. Exxon and Chevron, the biggest oil producers in the US, however, declined to comment.
Alright, then that's the latest coming in as far as oil prices are concerned. Lots to look at bright and early this morning. But tell you what, let's also take
in this hour. Central banks across the globe are holding rates steady, from a Fed to a BOJ and now the PBOC. First up, key takeaways from the second day of the FOMC meeting. Interest rates held steady as expected in the range of 4.25% to 4.5%. However, the FOMC has downgraded its collective outlook for the economic growth and gave a bump higher to its inflation projection. Officials now see the economy accelerating at just a 1.7% pace this year. This is down 0.4 percentage points from the last projection in December. In addition to this rate decision, the Fed also announced a further scaling back of its quantitative tightening program, in which it is slowly reducing the bonds it holds in its balance sheet. Additionally, despite the uncertain impact of Donald Trump's tariffs as well as an ambitious fiscal policy of tax breaks and deregulation, officials say that they still see another half percentage point of rate cuts through 2025. Now let's go across and listen in to that excerpt.
In support of our goals, the Federal Open Market Committee decided to leave our policy interest rate unchanged. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor, an admittedly challenging exercise at this time in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year.
Alright, then inflation remains somewhat elevated, and that's the word coming in from Federal Reserve's chairperson. But moving on, then meanwhile, there's some positive commentary coming in from Bank of America CEO Brian Moynihan, who also said that consumers are still shelling out money and economic growth should be solid, though slower this year, although consumers are shifting away from goods into services. Remember that this comes despite surveys indicating that confidence is at a nearly 3-year low amid increasing worries when it comes to inflation.
Now moving on, just a day after US President held a 2-hour-long conversation with Russian counterpart Putin, he held an hour-long phone call with his Ukrainian counterpart Zelensky. Trump said the call was aimed at aligning Ukraine and Russia in terms of their requests and needs, adding that the ceasefire efforts were on track. Zelensky said that a halt on energy strikes in the war with Russia could be established quickly.
If you like this video, then like, share and subscribe to ET Now.